Hey, welcome back to another episode of our City by City Market Pressure Review series. And today we go back to Victoria and look at the city of Shepparton. Victoria has been regaining momentum and buyers' interest in 2025. A lot of cities, including Melbourne, Geelong, Bendigo, Wodonga, Shepparton, Mildura, they have been growing faster and faster in recent months. So how is Shepparton's data really looking? Today, let's unpack it with 10 charts. Before we get into the charts, if you're here, chances are you're serious about property investment. But only knowing data is not enough. We need to act on it. If you are ready to make your next move, let's see if InvestorKit can help. We offer a 15-minute free discovery call. It's just a short chat to really understand your financial goals and see if we are the good fit to help you achieve those goals. If you're interested, check the show notes below or just go to investorkit.com.au to book it in. Now, let's get started. Chart 1 here is an overview of Shepparton's market performance. As we can see, 5 out of 6 metrics are performing either strong or very strong. The only relatively weak metric is growth cycle position, and we will look at that with one of the charts we're going to talk about. Otherwise, price pressure is healthy, rental pressure is healthy, incoming supply is at a balanced level, affordability is looking good, and the rental yield is actually high. So far, things are looking good. Chart 2 is migration trends and population growth trends. Over years, overseas migration and natural increase have been the major driver of the local population growth. Population growth rate is not really high now. It's only around 1.1%, slightly lower than Victoria's average of 1.2%. But both overseas migration and internal migration are stronger compared to the pre-COVID time, and we expect population growth to continue to trend upward in the coming years. And when we look at the local job market, it is still looking quite strong. Unemployment rate is just 2.8%. That is well below Victoria's average of 4.2%. When we look at the number of job opportunities, yes, it has declined from the 2022 peak, but it has stabilized at a much higher level compared to the pre-COVID average. So now we have a steady population growth and an active job market, and these two are creating a solid foundation for the local housing market. And now let's move into the property market itself. In the sales market, pressure is increasing. We can see that in the 3-month rolling median price line. That is the dotted line here in chart 4. Since early 2025, this dotted line has been increasing faster than the solid green line, which is the 12-month rolling median price. This means price growth is speeding up. Growth rates in recent months are actually higher than the previous months. And we can see the market pressure improvement in other indicators as well, including days on market and inventory. Days on market has been trending downward since early 2025. It is not really moving fast, but the trend is clear. And then the second indicator is inventory. Sales volume in Shepparton has been increasing over the past 2 years already, but the decline in supply level just started in early 2025. As a result, inventory has been trending downward since early 2024. The real fast decline happened in 2025. Back in March, April, the inventory level was around 4.7, 4.8. That's still above the balanced level of 3 to 4, but now, just over half a year, it has declined to a low 2.3 months of stock. Pressure is accumulating fast. And now, incoming supply. Over the past decade, new house building approval rates in Shepparton has always been around 2%, never exceeding 3%. In recent years, since 2023, house building activity has been increasing as reflected in the building approval rate increase. But overall, if we compare that with the total amount of house stock, it's still a healthy level. So overall, oversupply risk is relatively low. Chart 7, the long-term price trend. This is why we see that relatively low score in Shepparton's cycle position. Shepparton's last 10-year annualized growth was 7.2%, slightly higher than the long-term average of 5 to 7%. And in the past 5 years, the annualized growth was even higher, 9.6%. Both of these relatively high growth rates are the results of the price surge from 2020 to 2023. But over the past 2 years, prices didn't really grow much. At this moment, supply is shrinking. Demand is steadily increasing as we saw in the sales volume. The relatively high past growth won't stop Shepparton from growing faster. It's just that we may not see price surges in the coming few years as we saw in over the COVID boom period. Now the rental market. Rental prices in the past year have increased by 6.5%. But in the coming year, it might be slowing down because of the relief in rental pressure. And we can see that in the increasing vacancy rate. Vacancy rates have been increasing slowly since early 2025. This could be caused by two reasons. One is the increase in new house supply, as we saw in an earlier chart. And the second reason is that in the past 2 years, there have been more investors buying in Shepparton, attracted by the healthy rental yield, and that has led to more rental stock. If rental demand didn't catch up, vacancy rate as a result increased. Speaking of rental yield, Shepparton's yield is quite healthy, 5.5%. That is not just higher than other Victorian cities, except Mildura, but now it is actually also higher than Townsville, Rockhampton, these Queensland cities that were once famous for their high rental yields. But in the coming year, we may see this yield level hold still or even decline a bit as rental price growth slows and sale price growth speeds up. So now, affordability. Do you remember that we saw in an earlier chart that sales volume in Shepparton has always been increasing over the past 2 years? One of the reasons could be affordability. Despite the price surge over 2020 to 2023, and despite the interest rate surge from 2022 to 2024, Shepparton's affordability, both in the sales market and the rental market, have always been healthy. 2025, as price didn't grow much, but at the same time, interest rates come down and income also increased. Sales market affordability actually improved. And this improved affordability could become one more factor that could boost Shepparton's price growth recovery. So, what's going to happen in the next 6 to 12 months? As we've seen in the 10 charts, sales market pressure is increasing while rental market pressure is slowly relieving. As a result, the sales price growth will very likely speed up while rental growth might further slow down. And these two working together, rental yield may gradually decline. But regardless, a 5% plus rental yield is still healthy, especially if we consider there could be more rate cuts happening in 2026. So that was Shepparton in 10 charts. I hope you enjoyed it. If you have any questions, any thoughts, leave your comment below. I'm Junge, the Senior Research Analyst here at InvestorKit, and I'll see you next time.